The information and opinions expressed in this video are of a general nature and are not intended to be investment advice, research, or recommendations. Please consult your investment professional for your own circumstances. The information in this video reflects the opinions of Arca Labs and the video's participants on the date of production and are subject to change at any time without notice due to various factors. Arca Labs is separate and unaffiliated from any third parties participating in the video presentation, and Arca Labs is not responsible for any third parties' products, services, or policies.
Welcome to Tokenization Talks, powered by Arca Labs. I'm Annelise Osborne with Arca Labs. We are focused on innovating responsibly. We are excited to bring you institutional thought leaders in the digital asset space. Our guest today is Richard Walker, who is partner of Bain and who co-leads Web3 efforts. Thank you, Richard, so much for joining us. Really appreciate it.
Yeah, great to be here, Annelise. Thanks for having me.
And I did want to add that Richard and I met each other sailing last summer. So it's funny that we end up here today. So
it is indeed. You know, who would have known when I stepped aboard the boat?
Okay, so you are busy traveling and speaking around the globe. I would love to know, Bain works with institutional clients, again, global institutional clients. So
Right.
What are the headlines that you're hearing from your clients regarding digital assets?
Well, we're involved in helping clients understand, plan, and really participate in a tokenized future. We're hearing from our clients that they believe that there are massive opportunities to tokenize assets, in particular private assets, because of the relative friction, opacity, and illiquidity that exists in those markets. We do work with custodians and asset servicers, asset and fund managers, wealth managers, banks, insurance companies, but we're also hearing from other ecosystem participants, pension funds, family offices, and the like, who are really keen to bring illiquid assets into the financial system to make those assets more valuable in how they use them within their portfolios. So we're hearing that that the market is really aligning and organizing around a tokenized future, and that broadly, and this is from some recent research we've done and a paper we have coming out next month, all of those participants that I cited believe that the public market, actually the financial market infrastructure, will be replatforming this decade to a blockchain architecture, and that the blockchain architecture will be public in nature. And so there's work underway to get ready for what they view as an eventuality of a new infrastructure for the markets overall.
So that's interesting, the public nature, because initially institutions I would talk about private. And so it's interesting that kind of shift. I look at it as the intranet to the internet, right? Initially people are concerned about something public, but then recognize value. So you had mentioned a number of different types of clients. Where do you see the innovation coming from the first step?
Just a relative recent, I don't know, market engagement or observation, or change in like who's participating. It had been the custody banks as well as new digital asset custodians who were leading the way, along with exchanges. The level of innovation, or the areas of innovation, and I think the impact of that innovation has been overtaken by institutions, and lately by private equity firms who are tokenizing fund units for those private funds, and by the ecosystems around that that asset class. The infrastructure for tokenizing the asset has been building, and has arguably hit an exponential need. The distribution of that asset is innovating rapidly as wealth managers and RIAs and others see the opportunity to bring assets to a new pool of investors, and the qualified custodial infrastructure is now in place to help to custody those assets. So those three players against that private asset are really the areas of greatest innovation that we're seeing now, early in 23, and we expect to persist throughout the year.
So the ecosystem is building, it sounds, because the different players work together, right? So the different counterparties. So that's great to hear. Okay, so you had also mentioned Bain has some great research. You come out with some great papers. And looking at the private markets, one of them talks about the equity market being 4.5 times, the private market being 4.5 times larger than the public markets. Can you talk a little bit about the size of the private markets and private assets?
Yeah, happy to, Annelise. So, we talk about really the three primary assets, in the private market asset type. So global private equity, that's shares of private companies. It's 50 trillion. We look at global private debt. It's 160 trillion. And we look at global private real estate. That's 330 trillion. That's a total of 540 trillion in private assets that, again, are relatively, illiquid, relatively opaque, really not efficient markets. And there is tokenization happening in each of those three, but no particular category is leading. It's about equal across all three, but it's very early. To date, only, we estimate about 77 billion, 80 billion have been tokenized out of that 540 trillion. So it's less than 0.01% of assets have been tokenized. That might seem insignificant, but it is significant insofar as the rails to enable that, and the companies and the practices and the collaboration with investors and regulators is growing, and we expect that that number this year will hit some multiple, and by the end of the year we'll see 5x plus the number of assets, probably 10x, 20x, and so forth, as again the asset tokenization hits what would be considered an exponential knee.
So interesting. You said, was it 77 million that was
billion,
sorry, 77 billion that has been tokenized. So what has been tokenized? Because we're not seeing that on the secondary market and not as much on the primary market either. So is that available for purchase, or has that been tokenized for valuation or internal purposes?
There's not a lot happening in the secondary markets yet. There's some, right? It's early days there too. It's primarily assets being tokenized to be brought forward as collateral to provide for easier verification and use in credit lines, to allow a listing and a primary issuance for people to purchase a stake in, let's say, a real estate LLC that holds real estate. The secondary market for that is developing rapidly, but we're not seeing a ton of secondary market activity at this point. It really is it's an evolutionary build, Annelise, that it started with the retail crypto markets building global, anti-fragile, always on trusted networks. For that, exchange services for crypto and custody services for crypto was built. So those foundational rails were built. The next wave is to bring a new type of asset-backed tokenized asset, onto those networks, and that's going to require another level of and a different kind of capability, including, data management about the asset that backs the token. But ultimately, as you tokenize the asset, you list it, you do a primary issuance, you build a backlog of interest for secondary markets. It's going to rebuild the entire financial market value chain. There are still things missing, such as the cash on chain, or payment on chain. There's some of that through USDC and other stable coins. That's why through all of the CBDC efforts that are going on globally. Once you have that, the infrastructure and a payment mechanism on chain, is going to be even more attractive to bring those token assets onto the network and to facilitate secondary markets. So we see a lot of tokenization for improved asset servicing, for some primary issuance, but it's really just the beginning of all of the building blocks required to drive what we see as like 4 primary benefits. It's going to be the ease of verification, the efficient administration, the accessibility to new pools of investors, and ultimately, better liquidity.
So of that 77 billion, what has been tokenized, or more, I guess, what has been tokenized, and then what do you see being tokenized? We talk about real world assets. What real world assets do you anticipate being tokenized to open up the market?
Well, we see private shares of companies. So there's private markets where pre-IPO companies are issuing tokens against shares of those companies, often to give a form of liquidity or funding to employees, early stage employees. You see some of that trading on ATSs. So there is some activity there, but it's de minimis, on a global capital markets scale. We see tokenization of lending and of home equity and other types of private debt, and then finally real estate. And the real estate it's largely tokenized securities, so it shares in the companies that hold the property. Not a lot of tokenized titles for buildings and other things. That likely will come, but it's complicated on a county by county, state by state basis with all of the laws, rules, and regulations around real estate. So that's going to take some time to play out until you get the actual real world asset in a tokenized form, on chain for primary and secondary market participation.
Great. Yes, title is complicated because it's every town, city council that needs to upgrade their systems as well and accept it, the new way of being. Okay, so also in 2022, there was a lot of headlines. Now, headlines that might have been negative or risk-oriented. How did institutions take that into the digital asset sense? Did people slow down, or are they still recognizing that some headlines were not related to technology?
Yeah, there's an interesting dynamic happening. It feels like people slowed down because we had a steady stream of announcements, you'll recall, in, let's say, the second half of 21, the first half of 22. There's still, things happening. If you were to look at the signposts of announcements, in the third quarter and some in the fourth, some large investment banks, announcing a digital asset platform for tokenization of private assets, for instance. I think that the signal noise diminished a little, but the level of engagement and investment did not. The institutions that we talked about that we work with are proceeding despite recent developments, because there's a pretty strong view that this architecture and this design for exchange of value and transforming the capital markets globally and financial system is here to stay. And what we see, Annelise, with what we've talked about here for 23 for private assets, is that's really setting up the infrastructure for tokenization of all assets, including public assets. So there's no slowdown. There's just a level of slowing down of announcements, not slowing down of activity and conviction.
Great, always good to hear. Okay, so talking to institute, this is asking for your advice to kind of like sum this all up. So What advice would you give to institutions approaching digital asset strategy, given the growth of this technology and the potential
Yeah,
of technology too, I guess?
yeah. And just how different the technology is. Couple of things that we share with clients. One is, don't wait, engage now, get some experience with this tech stack, with tokenization, with digital asset custody, with the movement of assets, just to understand how very different it is. Um, Pick a few areas, perhaps in, this probably not groundbreaking, but on an enterprise basis for efficiency. I cited like 4 benefits that will come from this new infrastructure and tokenized assets. And one of them is efficiency around how those assets are managed, are moved, are serviced, or are exchanged. We see one large, actually multiply through one large, thinking, most of the large banks, money center banks in the U.S., began a couple of years ago doing tokenization of collateral coming in the door for repo trades, just to make it easier to manage that collateral within their 4 walls. Now, the benefits of that are that informed, their experience of how to do that, the insights it brought, the kind of information that they had, the dashboards they could build, how they could, connect and bring greater transparency and automation to, processes within their 4 walls, and then, use that to be prepared when you connect onto, shared ledgers, public shared ledgers, where you move your database out of your 4 walls and onto a distributed, decentralized ledger architecture on a blockchain basis with tokenized assets. That preparation can allow you to participate more quickly. Those organizations that don't do that work, that aren't doing the experimentation, the engagement, and the efficiency lift associated with tokenization and use of blockchain networks, will find themselves at a deficit. There'll be a learning advantage gained by the early organizations that may not be able to be overcome by the late joining organizations. One other thing, Annelise, that we recommend companies do is engage with the Web3 companies in this space through corporate venture capital and other targeted investments. Do this to get experience with the leadership team, have an incentive to more deeply understand the tech stack, to have an inside track on using that technology for what they build. And an interesting point is that within the Web3 category of investments, that's money that's deployed by private equity. About $96 billion has been invested in the Web3 technology space. That's a collection of companies. It's over 4,000 companies in this cohort. And of that 96 billion that's been deployed, about 48% of that has gone into financial market infrastructure companies in the Web3 space. That's wallet services, that's custody services, that's layer 1 protocols, that's data services. And so we think there's something to that. We think that that level of investment, that level of engagement, and participation by banks through their corporate venture capital groups, can use that as a way to accelerate learning. I had one very senior executive at one of the top investment banks say that everything that they've learned about the blockchain space, they've learned since they took an investment in one of these Web3 companies in 2019. And they said literally everything we know, we learned from them through that investment. So we recommend, the first thing I said was engagement and use of the technology and the tech stack. The second thing is investment through corporate venture capital. The third thing would be building, even if you don't invest, an ecosystem of partners to work with. And the fourth thing would really be having an operating model around this, because this is very, very different. And we see companies doing different things. We see companies federating into product areas and saying, go innovate in transaction banking, go innovate in capital markets, go innovate in wealth management. That was something that was done early when it was unclear like where this was headed. Those lessons resulted, or those experiments resulted in very few offerings coming to market, very little sharing going on, and so that there's also the top down. So have a separate group that did everything outside of any association with a product group, a market, a customer segment, a geography, and do things at the center. There was a group at the center that learned, but you didn't really connect it to customer propositions. From an operating model perspective, what we're seeing now, where the market is it's the top-down level of engagement and conviction. It's the bottom-up participation by the product groups and business units, and it's an integrated layer in the center of that operating model to use a common set of ecosystem partners to share lessons learned, to bring capabilities together into an integrated kind of market offering, and do fewer things but get more things to market. So that's really what we're recommending now. And if companies aren't doing that, 2023 is the year to get that in place, because it's a watershed year before what we see as that need taking off in 24 and beyond, as Web3 really gets institutionalized.
Exciting. It's a lot to do, but 4 great steps. So Richard, thank you so much for joining us. Really appreciate it. If you have any questions, please reach out to Richard or myself. I'm sure we'd be happy to answer them. Also, if there's any topics you'd like to hear on Tokenization Talks, we've got a great lineup, but happy to bring on subjects that you're interested in. So Richard, again, thanks, and appreciate your time. Bain's got some great research out there too, so happy to share that. And
just search Bain Tokenization, you'll find it, and Bain Web3.
Great. And Arca Labs, we just relaunched our website as well. So thanks so much. Stay well, and we'll see you next time. Thanks so much.
Thanks, Annelise.